So ARM will be the CPU of choice, if you will, inside these AI data centers. We power Grace Blackwell, which is the NVIDIA product that will be used, but lots of opportunity for all kinds of ARM technology. But most importantly, the CPUs that power Stargate, they'll be ARM.
If you haven't heard about this Stargate project, it's basically this. It's a new company which intends to invest $500 billion over the next 4 years building new AI infrastructure for OpenAI in the United States. They will begin deploying $100 billion immediately. This infrastructure will secure American leadership in AI, create hundreds of thousands of American jobs, and generate massive economic benefit for the entire world. The initial equity funders in Stargate are SoftBank, OpenAI, Oracle, and MGX, which is out of Abu Dhabi. SoftBank and OpenAI are the lead partners for Stargate, with SoftBank having financial responsibility and OpenAI having operational responsibility. Masayoshi Son will be the chairman. ARM, Microsoft, NVIDIA, Oracle, and OpenAI are the key initial technology partners. It makes sense that ARM gets mentioned here because, well, at the time of making this video, I believe that SoftBank still owns around 90% of ARM. And so in this video, I want to focus on ARM the company, the stock, and what we should be expecting from the upcoming earnings report, which will be at the start of February. If you enjoy this type of videos, hit all the buttons. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So ARM Holdings has a market cap of $170.8 billion. One share will cost you $162.5. This stock has, of course, outperformed the market by quite a lot. Right now, it has a forward P of 91 times. EV to sales next 12 months sits at 38 times. This is definitely not your cheap stock out there. It's definitely a stock, a company that's expected to grow quite quickly, top and bottom lines, with the bottom line actually growing quicker than the top line. When I say top and bottom, it's basically revenue and earnings. Looking at the current average analyst price target, there are 40 analysts covering this company. It sits 9.9% lower than the price we're at right now. Looking at the expected numbers for the upcoming earnings release, which will be February 5th, revenue should increase 12.2% quarter over quarter to $947.12 million. EBITDA growing 17.4%, EBIT growing 21.78%, EPS on a GAAP basis of 15 cents, that should be up 53.82% quarter over quarter, and on a non-GAAP basis, 34 cents, increasing 13.71%. Looking at some pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow. Price to free cash flow here, by the way, is the only one for last 12 months. All the others are next 12 months. It is higher than the current 2-year mean, let's call it. Even price earnings to growth is quite high at 2.76. Now, as we've seen, revenue is expected to grow quite rapidly, above 20% year on year. But what about free cash flow? Well, free cash flow, first up, for fiscal 25, the current expectations are for that number to come down 31.4%. But then we see a huge jump in fiscal 2026, 183.2% year-over-year growth, and then another 31.2% year-over-year growth in fiscal 2027 based on the current expectations. Where does the revenue come from? Well, it comes from one, license and other revenue, and then royalty revenue, which is the biggest chunk, which is the orange part right here. If we look at remaining performance obligations, or RPO, we can see that last quarter we've seen a nice jump, 10% growth quarter over quarter. But my main question here is of course, this company, of course, is an amazing company, very, very crucial in the semiconductor industry. And yet I am not seeing the growth that you would have expected, especially if you pay such a high multiple, a very, very high premium on this company and this stock. You would have assumed, yes, we've seen a big jump in RPO here, June 2023 to the September quarter. But revenue-wise, we haven't really seen that huge jump that we've seen with NVIDIA. We've seen NVIDIA grow 80% quarter over quarter, triple digits year over year. I'm yet to see that with ARM, despite all the talk about AI, despite all the ARM-based architecture, which, well, a lot of the huge companies around the globe are using. And that's basically the question I've been having for quite a while with ARM, acknowledging that this is an amazing company, but at the same time asking the question as, where is that big jump in revenue? Is that going to come from that Stargate project? Could very well be. Could very well be, especially since, well, they said, that was the CEO that we heard at the start of this video, that they are going to be, well, the one that provides the architecture for the CPU. And the same goes for the NVIDIA CPU. Now, another great thing for ARM shareholders to know is that right now you can see that still 50% of the current royalty revenue comes from products that they launched 10 years ago, over 10 years. We've been talking about that with regards to a foundry business like TSMC, right? Older nodes still generating quite a lot of revenue for a company, and yet here with ARM, it's the same thing. So just because they're launching new products right now does not mean that a couple of years from now, those products will not generate revenue for the company. No, on the contrary. We can also see that ARM v9 is now taking a bigger chunk of the overall revenue. We can see that compared to the other ones, v8, v7 and older, the percentage of revenue by architecture, they said the following: ARM v9 commands a higher royalty per chip than prior architectures, and ARM v9 adoption has started in smartphones and cloud compute. So as that becomes a bigger and bigger chunk, I would also expect revenue to grow faster than before because, well, it demands a higher royalty per chip. And so looking at the stock right now, last week, we've seen the stock go up, well, quite close to their all-time highs, which was back here at the start of July 2024. Back then, the stock did have quite a rapid decline to well under $100, which also meant that it went under the 200-day moving average. It did also recover when it went under the 200-day moving average at the end of 2024. And now we're sitting at $162. The 50-day moving average sits at $140 and the 20-day one at $141.8. And so while ARM is an amazing company, extremely well managed, the stock has outperformed, crushed the market, I am yet to see, well, I'm still waiting to see when that huge jump in revenue is going to come, right? With all the project, with all this AI thing, where is that jump? Why aren't we seeing that just yet? Are we going to see that because of projects like Stargate, because of Blackwell, because of, well, NVIDIA's CPUs and all of that? Are we going to see that huge jump happening in 2025? Could very well be. Could very well be. Me, right now, I'm sitting on the sidelines watching this play out. What do you think? Do you think ARM is worth the price paying today or not? Let me know down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.
Fab capacity does become an issue, no doubt, because when you start thinking about 3 nanometer and 2 nanometer, TSMC is the leader, is the only game in town on some level. So I think that is a potential limitation, or at least constraint. HBM memory and DRAM, for sure, that is another potential.